Great. So why don't we go around and would you all like to introduce yourself and what you want to see out of the class? Tony, did you want to kick it off?
Sure. So my name is Tony, and I really am not coming into this with any specific expectations other than just an introduction to how credit works. I've got a credit card and stuff like that. But when it comes to reading the statements or what APR or anything of that nature means, I don't know. So just breaking the ice here.
Perfect.
All right,
Thank you.
thanks, Tony. We'll definitely be going over APR and what a FICO score is in that. So we'll definitely go into that during this class.
Letitia, did you want to introduce yourself?
Hi, my name is Letitia. I don't have any expectations or any questions at the moment. Here to see what more I can learn about financial responsibility.
Thanks, Letitia.
Sounds good. Let's see, Mariana? Myrna, did you want to introduce yourself?
Yeah, my name is Myrna, and I think one of the questions that I have is I have a couple credit cards and I'm trying to pay them off, but I've heard that it's not good to pay them off completely, to leave some open. So just questions surrounding how to keep a good credit score, how to keep it balanced in that way. Thank you.
All righty, thank you. We'll definitely be going over that as well.
Anybody else want to introduce themselves before we get going? Okay, well, I'll show my screen so you can see the PowerPoint as Angela's talking. So hang on a second and let me get to it.
Thank you, Judy. All right, so today's class is Credit Score 101. So go ahead and you could slide to the next slide if you would. So what is credit? The ability to obtain goods or services before payment based on the trust that the payment will be made in the future. What is FICO? FICO is a public company that provides analytics and decision-making services, including credit scores intended to help financial service companies make complex and high volume decisions. So a FICO score is something that when you come into the credit union, our underwriters look at that. It is your score, your credit score basically, tells us how much financial background you have, how many open trades you have, and how often do you pay those back in a good, timely manner. And then go ahead and slide to the next slide. And then what is a credit score? Mathematical equation that evaluates the information in the credit report based on the snapshot of your credit report at a particular point in time. A number of lenders use to help them decide whether a person qualifies for a particular loan or service. Estimates the risk of a company, inquires by lending a person money, and the high score, less risk. So on this, it's just a credit score. Will also indicate if you had anything past 30 days past due. It'll also indicate to us how many open trades you have. And by when I say open trades, it indicates how many open credit cards you have, how many loans, such as personal loans, mortgages, those are called trades. So that is what a basic credit score is. And then Judy, you could go ahead and switch to the next slide.
Sure.
And then how could it affect your life? Credit scores are definitely tough to get to an even balance. Sometimes it's either too low, too high, or you just don't have enough. So these things will definitely help and definitely affect your life in many ways. So the amount of money you can borrow, The interest rate you'll get, depending on if you have less credit, if you are barely starting off on your credits, you are typically going to start off with a higher interest rate until creditors see you with open trades and see how often you pay those open trades on time. The length of time to pay back a loan, and the insurance premiums. Insurance companies definitely look at credit scores when it comes to how much they charge you per month. That a lot of people say, why is that? It's based on, again, how often do you pay your insurance on time? Have you ever let your insurance lapse at any time? So they definitely look at that as well. The ability to rent an apartment, that's a huge factor. You definitely got to have a great credit score or a good credit score to rent an apartment. And again, apartment complexes sometimes charge a little bit more if your credit score is less than ideal. And then job offers. So such as the credit union in Colorado, we check your credit score when you apply for us. And the reason why we check your credit score is we're the face of credit. They want to make sure that you're able to talk to someone about credit like I am today, and been through the ups and downs of credit, and you know how to establish your credit and maintain that good credit score. So they definitely look at that. Not saying that we wouldn't offer a person with a less ideal credit. It is just the basics is the person we're getting ready to hire, have they ever caused a company a huge loss, something like that they look at. And then the better score, the better financial options that you get, of course, throughout your life. So
if I could just stop you real
Yeah.
quick. I thought I heard you say somewhere in the beginning of that, you were saying too high, like balancing out your score and having it too high, or maybe did I not hear you correctly?
So like, as far as like, if you, I'm not sure what I was trying to get to. As far as if you're, maybe I was trying to say when your credit is maxed out at the max, that could affect your long-term.
Your high balance.
Your high balance, correct? Yep.
Okay, that would make sense. I was like, too high of a credit score, right? What?
Yeah, sorry, I might have misspoke. So
okay,
good question. Thank you.
I think someone else in chat had what number is considered less than ideal?
So the credit score is considered less than ideal is probably a 530 or below. That's considered bad credit. And a lot of things can play into that, such as you just don't have any credit, or you only have one open line, which such as like a low credit card. That's considered bad credit. But again, they look at that and say, they look at the big picture and say, hey, is this person new at building their credit, or is their credit score just considered bad at 530 just because they haven't been paying their trades or haven't been paying their loans on time? So and then a good credit score is considered about 720 or above. A lot of lenders are actually lowered that recently. It was 740. We considered good or above good, but now it's 720 just because the pandemic, a lot of states, the cost of living has went up, stuff like that. They take into consideration when looking at what is a good credit score.
Cool. Well, thank you.
Yeah. All righty. Judy, you can go ahead and switch to the next slide.
Yeah.
So what's in my FICO score? Your score takes into consideration all categories. So the biggest category is your payment history, like I was stating. You always want to make sure that you pay within the allotted time. A lot of people think that a late payment is going to reflect bad on their credit report, and that's considered not true. It may reflect bad with the lender, as such as a late fee or something like that, or when they go to lend to you in the future. But most companies only report to the credit bureaus every 30 to 45 days. And that is considered your payment history on your credit or on your FICO score. And then the amounts owed, such as your debt to income, that is considered made up of 30% of your FICO score. And then the length of your credit history is made up to 15%. And then your new credit, and then any other types of used credit is 10%. So does anyone have any questions on that slide? All righty. So what's not in my FICO score? A lot of people think that some things are considered when creditors look at your FICO score, such as your race, color, religion, national origin, or sex, or marital status. Your age is not considered in there. Your education, your job title, neither is your income, where you live. Any interest rate being charged on a particular credit card or other accounts is not considered. And then any items reported, such as child or family support obligations or rental agreements. The only time a rental agreement would ever be on there, again, is if you were to pay past your 30 to 45 days, that reports onto your credit report.
An eviction would show up too, though, right?
An eviction, yes, it would show up. That is correct. Yep. And then older problems count for less depending on how old they are. So here's the time frames and the approximate weight assigned to that year. So recent 12 months is 40%. Then anything between 12 and 24 months is considered 30, and so on and so forth. As the delinquency gets older, so does the time frame that credit underwriters or credit unions care less about, because obviously people go through hard times. I've been through hard times myself, and the older that trades get on there, unfortunately, or fortunately, they look less at. So they just want the bigger snap of your life within probably the 24 months or less. Any questions on that one?
I have a question.
Sure.
Would programs like with mortgages, like forbearance and things like that during the pandemic, does those show up?
So yes, they do. That's a great question. They do, such as the credit union, we helped members out on their auto loans up to 2 months on their auto loans. We let them skip. It does show on your credit report, but it shows as just a skipped payment. It doesn't show as a late payment. So therefore, the skip payment is just added on to the back of your loan term. So in essence, you're still going to make those loan payments, but we're just adding an extra 2 months onto the loan term, but we're helping you out in the current 2 months.
And would that be erased in how long?
What's that? I'm sorry?
Would the time frame for those after it passed, after you get back on track, how long does it take for it to be like in your chart?
So maybe I'm misunderstanding, but I think that you're asking how long will that be considered on your credit report?
Yeah.
That's not considered negatively on your credit report at all. That's just considered as you skipped payments. So for instance, even before the pandemic, even if you fall into hardship, the credit union will let you skip a month's payment due to hardship once every 12 months. But it will never show negatively just because we allowed you to skip that payment. It will just show that it skipped that loan payment on your credit report. So it will have an X on a credit report showing that it's just been skipped.
Oh, okay. Thank you.
Yeah. Yeah. In essence, the credit union and different banks and loan people that lend loans out there, they actually make money off of letting you skip these payments, because at the end of the term, you're going to end up paying more interest on the loan than versus paying that loan off 2 months early, which you wouldn't have skipped if you didn't need that. So hope that makes sense.
Yeah, thank you.
Any other questions? Alrighty. So reports display amounts owed on all loan types, whether you show a balance in certain types of loans, how many loans have balances, or how much of a total credit line is being used on revolving credit accounts or loans, and how much is still owed on installment loans compared to the original loan amount. So that's just saying that it reports to your credit report regardless of what you owe. They're not looking of how much you owe, they're looking about how often you pay it and when you're paying it off. What typically gets reviewed for our new credit? So when our underwriters here at the credit union look at these loans, they look at the number of new accounts and loans you have. Say for instance, a lot of people go in, they're searching for a new vehicle. A lot of people are like, oh man, it's gonna hurt my credit. When in essence, the underwriters could see that this particular person is searching for a new vehicle. So you could go to many different dealerships and the underwriters will see, hey, this is a dealership pulling all these credit reports. So they'll understand that, hey, it doesn't hurt your credit or it doesn't negatively impact you when you apply for a new loan.
So Angela, what's an underwriter?
So an underwriter is a person that decisions the loan. They look at, they pull your credit, they look at the length of membership you have with that particular bank or credit union. They look at your financial snapshot of your life. And then they determine based on those things that they have in front of them, if your debt could outweigh your income. So anytime that you are looking for a new loan, the underwriter is a person that says, hey, this is how much the person makes per month. Can they financially support this debt for the long haul of how many months they take this loan out? So we have some companies outsource their underwriters to a different company. We actually have underwriters that work for the credit union in Colorado that you're talking to a live person when you actually talk with them too. So.
Hey, thank you.
Yeah, you're welcome.
Are we ready to move on?
What's that?
You ready for the next screen?
Just want to go over this real quick. The length of time since a new account or loan was opened, how many recent requests for credit. Again, this is just, they could see you shopping around if it's for a new car or if it's for a new mortgage. But say for instance, you're going to get a new credit card, that negatively impacts your credit score because some companies, you're trying to just get a $500 credit card from Capital One, but then you come here and we could see that Capital One denied you on your credit report, or that they pulled your credit, I should say, and you're coming here to get a credit report. So we have to take into consideration how many cards did they really have out there? Did they just open a new credit card that's not showing up on their credit report? So the underwriters definitely take into consideration when looking at your credit at that. And then the good recent credit history following past payment problems. So you might have good credit history now, but your snapshot of your credit reports tells us your whole life story basically since you started your building credit. So did you have a foreclosure 2 years ago or file bankruptcy 2 years ago, but now you have good credit history? We have to take into consideration all that when trying to approve you for a loan.
What are the odds then if you did have a bankruptcy in the past of getting the new loan?
That's a great question. So say for instance, someone files bankruptcy, your bankruptcy, it depends on if it's a chapter 13 or chapter 7. I believe there are different time lengths. I know chapter 7 stays on your credit report for 10 years. So they'll negatively see that impact on your credit. But after 4 years is when you could actually start buying a house. Again, after 2 months, you could actually start opening new trades again. But again, it really depends on the lender on if they're going to approve you or not, because they could see that bankruptcy. So what did you really file bankruptcy on? And they'll be able to see what loans or what trades you filed bankruptcy on to clear out your debt.
If you use like credit counseling to like consolidate your loans and pay them off that way, to a reduced balance on each of the credit cards. Does that get reported on the credit report as
I
well?
do.
So we have a third-party company that we help our members out with, and they're called GreenPath. What GreenPath does is help negotiate. Say you're running into a financial need, or you just can't afford the interest rates that credit cards are offering you right now, or you just ran into financial hardship. They will come back and negotiate with the lenders to lower your interest rate. So what Judy is saying is that that tells the creditors or the creditors and your credit report, it does put on your credit report that you are in a relationship with a third party vendor helping you reduce those credit scores, those interest rates, to lower your payments or help you financially sustain for future use. So that does appear on your credit report negatively, but it does let lenders know that, hey, you are not filing bankruptcy, that you are trying to work out your credit problems. So they take into consideration when they see that as well. But most lenders will not let you take out new credit if you are working with a third party company to consolidate your debt, such as lower your interest rates or help you with your monthly payments.
Okay, and how long does that stay on your credit history?
That will stay. It does stay the length of bankruptcy, 10 years. But again, after a few months, that does fall off once you are no longer in partnership with that third party company.
Okay, great. Thank you.
Inquiries into your credit. So don't affect credit that much. Only one inquiry might lower your points by 5%. A lot of people were like, oh, I don't want you to pull my credit. Say for instance, here when you open an account, a checking account, we do a hard inquiry. A hard inquiry will lower your credit score by 5 points. And it does show all lenders that we have pulled your credit for some reason. A lot of people think, oh man, it's good. I've worked so hard for 5 points. And in essence, the 5 points, when you make another loan payment or another mortgage payment, that 5 points will automatically come back. But say for instance, you pulled your credit like 13 times within the year, that does really impact your credit score and your credit rating altogether, because they're saying, why is this person trying to pull their credit or get so many loans when they can't afford to do that based on what their financial snapshot looks like. Seeing a chat come in. So I don't have any jobs yet. So regarding your question about your jobs, as far as you not working, yes, you could still build your credit. There is a such thing as a shared secured credit card that a lot of credit unions and banks have. So you would, well, in essence, we would take $500 of your own money. We would put it on a credit card, and you would use that credit card just like you would your own cash, but we're giving you a credit card, but we're charging you interest to build your credit. So that will help you build in the long term. A lot of people, that's how they start out. That's how I started out building my credit, is got a small secured credit card. Even if you don't have a job, if you have some sort of income or even a savings, you could use that money to, in sense, it's like a gift card, right? You just use that card, whatever money is on that card, and then you could reload it and then use it. And it's just building your credit, and you're responsible for paying those payments every month. to maintain a good credit history. Hopefully that makes sense. Yeah.
Could you tell us the difference between a secured and an unsecured credit card?
I sure can. So a secured credit card is when goods are financially secured against it. Some companies like Ace Cash Advance, stuff like that, they might allow you to secure a credit card with other belongings, but most creditors will only allow you to secure it with cash, with your own cash. So that will allow you to, again, in essence, get a credit card where we charge you interest. You're responsible for paying that payment monthly, but we're letting you build your credit in doing so. An unsecured credit card is where you don't have to have any goods to put up front. We just give you a credit card with 1,000 or whatever limit that we approve you for. And again, you're just responsible for paying those payments on time in a timely manner, and however much credit you use at that time. So our credit cards are really good. They're one of the lowest in the industry at, I believe, 6.25 is the lowest interest rate you could get, and the highest interest rate is 18%. A lot of creditors charge a lot of interest just to have a credit card. I see 27% sometimes, which is crazy. So if you're ever looking for a credit card, just make sure that you go to a local credit union, hopefully us, to get you get you started with that.
Thank you.
Yeah, you're welcome. Then again, just pre-approved credit offers, reordering your own credit report and requests from employers. These are not counted at all when trying to when it comes to lowering your credit score. Pre-approval offers, I'm sure a lot of you guys get those, or you will start getting those as you build your credit. Hey, we're offering you, you're pre-approved for this amount. That's just saying that, hey, based on your quick snapshot of your credit, you're pre-approved. Until we pull your credit, then it'll tell us the big financial picture and how much we could actually approve you for. Alrighty, any other questions right now? Alrighty. And then inquiries not into your credit report. Scores looks at rating shopping. Multiple inquiries in 14-day period of a specific loan, like I said, will only count as one, like I was saying, for such as a home or auto. If you have multiple credit inquiries within those 14 days, they're only consider as one inquiry. Scores ignores all inquiries made in the previous 30 days. Find a loan in 30 days. Inquiries won't affect score while rate shopping. Do you have any questions on that? Okay. So important note, so scores take into consideration all categories, and importance of any factor depends on the overall information in a credit report. Scores only looks at information in the credit report. Lenders often consider additional factors when making decisions. They also look at your debt to income, your DTI, debt to income, and that is considered your debt versus overall what you make. Can they financially, again, afford this in the long haul, not just the few months leading up unto the your first payment, but is the loan going to be paid back into us years down the road? Such as the length of employment, they'll look at how long has that person been employed at that certain job in order to maintain a good credit score to pay us back on time. And I'm just reading back on the chat where you could start that as far as that shared secured credit card, I'm believing that you were asking. If so, you could start that at any bank, yes. We do here at the Credit Union in Colorado, we do offer a shared secure credit card. And I empower my employees to underwrite them in-house, where anything 1,500 or less, we could definitely approve based on my decision, and I like to empower younger people to get their first credit card. So I'm always approving these type of credit cards to really financially start them on their journey, because a lot of people it's hard to really start your credit. Credit's a funky thing when it comes to starting. So I definitely empower my employees to get those credit cards out there and for you guys to start using them. What is a good score? What's up?
No, I'm just responding to Deborah. She put
Okay.
a note in the chat as well that she's paying her rent at King Supers with a WIP payment. She said Walmart and King Supers Cash Services, they give her a routing number for rent each month, and so it's no more taking money on site.
And you said this is for rent.
Uh-huh.
So what was a question? I'm
Yeah, I think she was just making a statement.
Okay. Okay. I apologize. I don't use Zoom very much. We use Teams, so I'm trying to find the chat feature and everything as we go through this. So I apologize if I'm missing any questions out there.
Oh, you're good.
So what is a good score? Not one score cutoff used by all lenders based on particular lending decisions. Your lender can give you guidance on the criteria for any given product. Example, the credit union in Colorado qualify members in the lowest interest rate are auto loans for a score if the score is 720 or above. So regardless, we base our decisions off solely off credit scores and your relationship with us. If you have a 720 and above, you will get the best interest rate regardless of what your debt to income looks like. So a lot of lenders don't base that off of, they look at your debt to income, your credit score, and all sorts of other factors. Here at the credit union, we do not. And this is as of 9/22, and now it's still the same thing, so.
Earlier, when you were talking about your credit card, do you have to be a member to get the card?
Yes, that's a great question. So a credit union, I'm not sure if any of you belong to a credit union, but credit unions are member owned. Our members are the what keeps us going. We're for nonprofit. So if you were to open a membership, we charge a $5 fee. That $5 fee stays in a holding until you ever decide to leave the credit union. If you decide to leave the credit union, you're entitled to that $5 back. But you do have to be a member in order to partake in any of our services that we offer. Such as our coin machines, a checking account, loans, anything that we offer, you would have to have that $5 pledge to the credit union since we are member owned.
Okay.
So tips to improve your credit score, pay your bills on time. That's a huge factor, and anyone's, don't let it go more than 30 days past delinquency. If you ever struggle with the bill or man, I just can't pay that, the worst thing you could do is not call the lender. I always tell my members, hey, if you know you're not going to be able to afford this come 10 days till it goes to collections, let us know, because we have the capability to stop it from going to collections. We have the capability of working out payments arrangements with you. So make sure that you call your creditors to see if they could help you prior to going to collections. Especially nowadays and age, it's with the virus and everything, there's programs, there's assistance out there where it costs the lender more money to send it to collections than for us to keep it in-house and work out a payment arrangement with you. Being aware that paying off a collections account will not remove it from your credit report. That is a very true statement. A lot of people say, well, I'll just pay it off and my credit will be good, back to normal. No, once it's on your credit report, it's on there for 7 to 10 years. It's not coming off. It's going to look negatively on your credit. It's going to show either a charged off account where that institution took a loss on that credit, or you just failed to pay that payment for that month. It will change the status to paid, but Our underwriters, I'm speaking for our underwriters here at the credit union, they're still going to see that as a negative impact. Keep your balances below on your credit cards and any revolving credit. And what that ideal situation is to have 70% of your revolving credits available. You always want to have the remainder, the 70% always available, because if it's more than 70%, lenders are going to say, why is this person using so much credit when they have such a good job? Why aren't they using the income that they make from their job to pay their or to live their lifestyle? Is it really a risk for us to take on because they're using so much revolving credit? They're going to max out all these credit cards, and then 5 years down the road, they're going to find themselves in more debt, and they're going to need another loan and then another loan to pay off these debts. So just never use more than 70%.
So I do have one argument about
Yeah.
that, because I don't maintain that 70% availability, but I always pay my credit cards off before the due date. And so I kind of look at that with like a level of resentment, if you will, because I always pay them off. Like, because
Right.
why do they incentivize you to use your credit cards and they give you those cash points and stuff like that that you can redeem for cash? And then like on the flip side of it is like, they want 70% of your credit available. Well, I do all my purchases on my credit card so I can get those points, and then I pay it off once a month. So it seems like a conflicting system to me.
It is, and that's very true, Tony. Credit is a game. It really is a game to lenders, to consumers. Even so, you're paying yours off every month. So they're seeing that you're paying it off every single month, and you're keeping that available. What they're saying is don't go and max out your credit cards and not pay them off, or pay your minimum payments and then keep on using, because a lot of consumers they'll pay their minimum payments, but then their minimum payments will be $30, and then they'll go and spend $40 for the month, and they're not really getting ahead. They're just digging themselves more and more in a hole. In your instance, you're not digging yourself more and more in a hole. You're utilizing your credit card to the best of its ability to help you maintain a better credit score. Say for instance, because you're using that one to gain points or rewards, plus it's helping you build your credit, plus it's showing the credit card companies that you're able to pay that debt off every month. Which vice versa, if you're not utilizing, I mean, if you're just spending and barely making your minimum payments, you're really not working that to your best advantage.
So they're
sense?
they're not punishing you. So I'm trying to think how to say this. So if you're paying it all the way down to a zero balance, that 70% availability isn't necessarily you're talking about from month to month, or I'm trying to understand like
From month to month. Yes.
Okay.
Yeah, from month to month. I'm not talking about like the long term of the credit card. I'm talking about month to month.
Oh, okay.
Yeah,
okay.
Because again, just remember that your credit report, your creditors report every 30 to 45 days.
I see. Okay, thank you for clearing that up.
Yep. And then pay off your debt rather than moving it around. A lot of people go and max out one credit card, and they'll be like, oh, this company's giving me a special on moving it to them if I move all my debt over. You're really not doing yourself justice. You're just moving one debt to one place to another. The creditors could still see your full screenshot of your full snapshot of your credit. So you're really not fooling anyone if you're just moving that debt around. And then don't close unused credit cards as a short-term strategy to raise your credit scores. That actually does hurt your credit report or credit score by closing. Say for instance, you have a credit open for 2 to 3 years. You've already built all that history with that. Once it's closed, it's going to appear off your credit report as closed. So then the lenders can't see that all that history that you recently or that you made in the past with them.
Thanks for that explanation. I always wondered why they said that.
Yeah. Yep. I don't have any credit cards that I use, but I have some that are open that just stay in my drawer for free for emergencies, but I won't close them just because of that reason.
Okay, thank you.
Yeah. And tips to improve your credit score a little bit more: do your rate shopping for a forgiving loan within a forced period of time. If you have any multiple inquiries in a short time frame, it is likely they'll be lumped together as one inquiry. We went over all this already. Apply for and open a new credit card accounts only as needed. Don't a lot of companies will say, hey, we'll give you flying points if you open this a credit card, but look at the fine print, because a lot of those airlines, they're at like 27% once their promotion ends. It's really not doing you any justice. The credit cards you really want to get are with credit unions or banks, because there's really no hidden agenda on their cards. Some banks will have some like a promotional period. After the promotional period, your interest rate could go up to 20-something%. Just a word of advice is never pay more than 18% on a credit card. You can find a credit card out there that's lower than 18%. I don't care if you're barely starting out on your credit. There is credit, such as a credit union, will never charge you more than 18% on a credit card. And then a good rule of thumb is not to opening more than 2 trade lines per 12 months. So that includes any personal loans, credit cards. Don't buy a car and open 3 credit cards. 2 trades, that means 2 loans per year. Note that it's okay to request and check your credit report. You are obligated to a free credit report on annualcreditreport.com. A lot of people go to Credit Karma, I believe it is. Credit Karma is good. It does give you a brief snapshot of what your credit looks like or what's on your credit report. I don't really truly believe that the scores are accurate on Credit Karma. Credit score could differ from the 3 credit bureaus by 100 points each. Annual credit report seems to be more in line with your accurate score. So I would suggest going there if you need to pull that. And how fast will your credit score change? Score will change when the credit report changes, again, 30 to 45 days. Won't change a lot from month to month. This statement was hard for me to put in there. It can. I've seen people's credit report go up 30 to 40 points. It really depends if you're buying a mortgage and you're 3 months down the road or a month down the road, you make your first payment. It will increase significantly on stuff like that. Bankruptcy or late payments lower your score fast. Improving score takes time. And again, it's a game, like I was telling Tony, it's a game. It really is. It really is. I'm 35 years old, and it's still taking me time to figure out my score on how to balance it out by paying payments on time or paying things off on time, paying things off and leaving my credit cards open, stuff like that. In a given 3-month time period, only about 1 in 4 people has a 20 point change, and that is pretty true. It just really depends on how many open trades you have, how often you pay them, things like that. So. And I believe that's the end of the slide. A lot of information to take on Credit 101. I am always here if you have any questions. Feel free to come to the Credit Union Colorado at the Southeast or Aurora location. But I'm going to open up for questions. Do you guys have any questions? Anything that I can answer to help you on your road to building your credit?
So I am self-employed. So
Okay.
not to try to go too far into personal details, but I have 2 personal credit cards and I have 2 business credit cards.
Okay.
Do my business credit cards affect my personal credit score?
That depends. Are you running your business off of EIN, or are you running it off your social security number?
It's not, it's on an EIN.
Okay, so those are 2 different factors. So it's not really benefiting you in the long call, it's benefiting your business.
Okay.
Because they run everything off your social security number when it comes to credit score. A credit score.
So my business activities have their own credit score in a sense then? Is that what you're saying?
In a sense, yep. So for instance, anything that you apply for your business, your business is its own entity. So that is its own person. So they'll base it off of that EIN number, how many factors or how many trades does that EIN, how long has that EIN been established, just like a person.
Interesting. Okay.
Yep. Great question though. Any other questions that I could help you out with?
I have a question. Sorry.
Go ahead.
I've heard that it's better to have a line of credit or just an account with a credit union because you guys have better rates than a normal bank. Is that true?
That is true. I've spent my whole career with a credit union, and I'm not just saying that just to say this because I work for a credit union. Again, credit unions are member owned. So you pledge that $5 for us to be able to lower our interest rates more than a bank does. Banks are FDA insured, which are government related. Credit unions are NCUA insured, which is member owned. So again, that allows us, those pledges to the credit union allows us to their in turn have our rates a little bit lower than banks do.
Thank you.
And that's why I say that you'll never see a credit union charge more than 18% on any kind of loan that they have.
Thank you.
Yeah, great question. So again, I'm at the Credit Union in Colorado. I see that Deborah was asking that. I'm at the Credit Union in Colorado at our ILIF location, which is off of ILIF in Quebec, right on the corner in that shopping center, Credit Union in Colorado. And then I also manage our Aurora location, which is off of Quincy and Parker Road. So come on in. Any of my employees will be happy to help you start building that credit. If you come in and apply for a credit card and it's your first credit card, just let them know, hey, I was on Angelo's credit building class. He told me to ask for him. They'll reach out to me and definitely get you started on a credit card to help you start building your credit. Any other questions that I could answer?
This was a lot of great information, Angelo. Thank you.
Yeah, you're very welcome. Join us on our next class. Judy and I will be preparing classes throughout the school year to help you continue your journey on getting good credit and just different things about the financial literacy program that we'll offer. So.
Right. And next month for November, we're going to be talking about identity theft. And it will be an in-person session located on the Center Tech campus in the admissions building in the conference room 8114. But I'll go ahead and send an email out to everyone and let you know when it'll all be. And I thank you all for joining today.
Thank you.
Yeah,
Thank
thank
you.
you all.
Thank you.
Have a good one.
Okay. Have a good one. Thank you.
Thank you.
Bye.
Thank you, Angelo.
You're
Bye.
welcome. Have a good day. Bye.
You too.
Bye.